Hello and welcome to today's edition of Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we have had news from China that authorities have pledged stimulus to help that ailing property sector. That has helped lift commodity prices. Still on the cards today, we do have CB consumer confidence data, and that's out early afternoon out of the US. And obviously, earnings season in the US is ongoing, with General Motors perhaps being one of the bigger names reporting out later today. Let's look at some charts, and starting off with the US dollar basket. We still think that long-term trend for the dollar is down, that dollar index. However, we are still rebounding from oversold territory, and we have now broken above that 100.50 mark, and that does target a move back up to about 101.85. We're not looking at being long into that move. We are, however, waiting to see where that move takes us, looking for a bearish reversal and then considering short entry. As long as that reversal happens before we start moving above that blue line in our chart, that 200-day simple moving average. If we do get above that, then we'd say that longer-term downtrend has been broken. Doesn't necessarily mean it's up, but then we can consider a broader, longer-term sideways range-bound environment and then continue to trade between the levels, but not just keeping a short bias as is currently assumed on the dollar. So waiting for strength to pay out, looking for a reversal before that 200-day simple moving average. Looking at the euro dollar, inverse of what we see on the dollar basket. Obviously, euro has a big weighting in that dollar index, but longer term trend is up. So that's suggesting euro strength, dollar weakness. But in the short term, we are seeing the opposite of that. We are seeing a pullback from the high. So we're seeing a correction of this uptrend at this point in time. That correction is still ongoing. So we want to see where that correction settles. We're looking to see that end with a bullish price reversal, just a price ticking back, a bullish candlestick pattern. We don't have that yet. And while we don't have that, we're respecting this pullback. The next level considered somewhere between 1.0990 and maybe around about there, 1.0990. Now, if we break below that, 1.0800 becomes the next level of support, and same idea is assumed. We're looking for a bullish price reversal before one of those levels where we start to change our bias. We see that price crossing below that 200-day simple moving average. So that pullback doesn't end with a bullish price reversal and extends past that. Then we'd look at a longer term uptrend being broken and consider a sideways range-bound environment for the time being, up until such time as we take out major lows. Then we consider that whole longer-term uptrend to have reversed. But for now, it is intact, but we're on a short-term correction of that longer-term uptrend. We're seeing how far that correction takes us. Chart of cable is similar to that. Longer-term trend is up, so pound strength, dollar weakness. In the short term, we are seeing a correction of that trend. So we're seeing a pullback from those highs. And we do have a bit of a bullish reversal starting to form. We've got a bit of a green candle. The day is not yet complete. These are, of course, all daily charts that we are looking at. So if we see a positive close there, well, that might suggest that that current short-term pullback of that longer-term uptrend has ended, and we start looking at a move towards the next levels of resistance, 1.2965. And if we get through that, then a retest of that high, 1.3135. But this does need to, this candlestick reversal does need to confirm. We want to see a positive close above at least that halfway mark. I'd say probably even above the open or the top of the body of that preceding candle, just to confirm a bit more of a meteor reversal at this point in time. If it doesn't confirm, then we're looking to our levels 1.2750 and close below that 1.2543. Although we would not be looking at shorting those moves because we still consider that longer term trend to be up. Only when we start moving below that 200-day simple moving average would we consider that longer term trend to be broken. Now moving over to indices, starting off with the US indices and the Nasdaq, the US Tech 100. Now that longer term trend is still up. We've seen a bit of an acceleration of that trend. Had a very, very short term pullback there, and now we look like we could be reversing or ending that pullback and continuing gains. Now I think these are small bodied candles. They don't give you much conviction that we are renewing against the upside. If you want to see a bit of a stronger close on today's candle before we start targeting and move back towards that 16,000 level, which is a target on the upside. In that situation, traders might consider having a close below that 15,300 level as a stop loss consideration for the trade. But longer term trend up. Short-term pullback looks like it could be ending or settling. We're just waiting for a little bit more confirmation, a bit of a stronger close on today's candle, at least. If it doesn't happen, we start, we give up today's gains. 15,300 is a short-term support target. Pull back and close below that. We start looking towards lower levels, probably about 14,940 odd as that next level of support. Wouldn't be looking at shorting that, but waiting for the price to settle and give us a bullish reversal for long entry. Now, S&P 500. Similar picture. We've got this accelerating trend here. We've got that longer term trend is still clearly up. We are however sitting in overbought territory, and we have had a bit of a very short term range bound type environment over the last 4 or 5 days or so. Bit of a tricky one, chasing highs here. So we haven't had a pronounced pullback like we saw, not very pronounced, but more of a pullback like we saw on the US Tech 100. So maybe waiting for a bit of a breakout there, close above that 4,575 level before start targeting 4,630. But even so, where to place your stop loss and search for that, maybe a consideration is below that 4,520 mark. You need to assess whether that's a worthwhile risk relative to reward, especially when we are looking as elevated as we are right now. But we respect the trend, keeping that long-term bias, a trend upward bias, long bias to trades in lieu of the price trend, still firmly above that 200-day simple moving average. Now the DAX 40, the Germany 40, long-term trend up, short to medium-term trend we've talked about is a range-bound trading environment. So because of that longer-term trend being up, we still consider keeping a long bias to trades, and we are trading off those levels. We had that reversal of at 15,485. We've had quite a meaty, quite an aggressive rally. That rally looks to have lost a bit of momentum. We can see these small-bodied candles as we approach that resistance. Now we have fallen short. We haven't reached that 16,330 target yet, but I'd say that a bit of that momentum does look to be lost at this point in time. So for me, a preference would be to wait for maybe a bit of a pullback or a correction from overbought territory and hoping to pick up the DAX again closer to one of our support levels on a bullish reversal. Initial one being about 15,715. Now, FTSE 100, this long-term sideways range-bound environment remains in place, and we've identified that. But when you see that price just zigzagging or whipsawing back and forth through that 200-day simple moving average, it is a showing of that longer term trend to be non-directional. In that situation, we look at trading between the levels. This reversal, this slight break of the 7,285 level, which we talked about a few weeks ago, produced a nice reversal, and we have aggressively moved through a number of resistance levels here, 7,410, 7,560, and now we are trading through 7,650, and we're getting close to the next level there, which is 7,700. Now we are starting to look overbought currently, quite aggressively overbought. That indicator is sitting quite high. And we do find more relevance in using indicators, overbought, oversold indicators in range-bound environments, because those indicators too themselves are range-bound in nature. But the price comes first. The price is still ticking up. But certainly if we do see a bit of a bearish reversal, price just ticking back, showing that it stopped rising and reached a short-term top around the 7,700, could give a possible short entry opportunity, suggesting a move back to about 7,560, in which case we'd look at the reversal high or a close above 7,700 as a possible stop loss indication. Now that hasn't formed yet and might not form. We could still see a break, a move above that 7,700. If we get the price closing above that, then we'd probably start targeting a move to 7,800. I think after the recent gains, it might be a bit of a trickier one in terms of getting long into quite an overbought index at this point in time, just assessing that risk relative to reward of that particular trade. So probably prefer to wait out a bit of strength if we do see a close above that 7,700 mark. Right, moving over to some commodities. Starting off with Brent crude. So Brent crude oil, that longer term trend has been broken. So we had that downtrend that was in place. We saw the price trading above that 200-day simple moving average. We've had a pullback to support 7,850. That pullback ended with this bullish price reversal. This we circled black here. and then we have now extended those gains. So longer term trend downtrend was broken. We're trading a sideways range-bound environment at this point in time. We've had a bullish reversal off of that, and we've taken out this high, and now we're looking towards 83.80. We are in overbought territory, so we are starting to look a little bit overheated at this point in time. So a bearish reversal around this might be considered short entry. Close above that, could consider further gains. Our preference is if we get the bearish reversal to look for short positions, or rather on a close above that, we'll probably wait out strength on Brent crude. Looking at spot gold. Now, longer term trend is up. Price firmly above that 200-day simple moving average. We've had a nice move here after that trend line break, just to show us that that longer term uptrend was now continuing. We broke above 1,945. We've reached that target of 1,800, and from that level, we've had a bit of a pullback. Now, what's happening right now is we do see a bit of a bullish price reversal forming now. It's not complete because we want to see this candle hold at least where it is right now to suggest, okay, this pullback has ended. We can start targeting and back up to 1,980. So the close of today should be telling on that. Obviously, we do have a lot of data coming out this week in the form of interest rates, the US ECB, as well as Bank of Japan. The US data, probably the most important relative to gold because it's inverse relationship with the dollar. But certainly here, bullish reversal. If it does hold up technically, we target a retest of that 1,980 mark while using a close below that reversal low, that 1,945 mark as a stop loss indication for the trade. All right, platinum. So now platinum has been in a range-bound trading environment, similar to what we see on the FTSE, where you see the price whipsawing back and forth through that 200-day simple moving average. So we are looking at trading off the levels. That rebound worked out very, very nicely off that 905 level. We went through 940, and we've actually exceeded our 980 target. So it does give us a short-term high there of about 995. And our pullback from that level looks to be ending right now. If we get a positive close as it lies right now, that suggests that we are seeing a bit of an extension of that, and we'd be targeting a retest of that high at about 995. In that situation, looking at a close maybe below that 954 mark or 955, if you want to round it off as a stop loss suggestion. And that's, of course, if today's candle does close more or less where it is right now. Right, that's all the charts from me. Thank you very much for watching. Sean Murison, Senior Market Analyst at IG South Africa.